guys, John here, Forex Fire Smart Money Concepts. Today's training or today's analysis on the charts is going to be everything about the risk to reward and how do you fine tune that to get the best out of your trades. Okay, so we're going to head over to the charts. I'm going to try and make this as short and sweet as possible and easy to follow. Right, so what we have here is the Euro USD. Okay, now what I'm looking at is different areas of sort of high and lows. You can see we had a downtrend here, and then we had a shift in the uptrend. Okay, so this here is a lower point. Okay, and then we come up to make a higher high, and then a higher low. Okay, and then we broke this structure here, creating a new higher high from this area here. Okay, so what I'm going to do is break my fibs out from here and up to that point there. In fact, that'll be from that low point because we had this here. Okay, so we've come up. That's a return. So you've come up, correction, and then up, correction, up, a correction, and made a new higher high from here. Okay, so we're doing from this lower high to this higher high. You can see we've got our money zone. Okay, this is our money zone. We can see on the high we come down to correct, but we're going to bring in the imbalance into this as well. Okay, so if I just put my fibs on this big engulfing candle, okay, and then put a horizontal ray on the halfway point on there. Okay, then I go back onto here, get rid of all the mess. You can see the imbalance area. We spoke about this last night, how important these areas, okay, of imbalance are and how they fill the contracts. Now, I can't make this stuff up, guys. Even though we go on these areas as TP, you can see this is more or less an equal high. This is more or less on the halfway point, but this is the exact halfway point. Look at where this contract is being filled. It's being filled to the pip, okay? On top of that, how would you trade this? Okay, so what you're going to do is you're measuring your stop loss, okay, from there to there. And we've got around about 24 pips, okay? So I'm just going to put in here 24 pips SL. That's our SL, right? Now I got asked a question last night. How do we get the red and the green boxes on? And then I figured out what the member was on about. You were simply going on to the instrumental panel, click on here. Because you're going for a buy, you click the long position, okay? And you've got this here. You click this on onto this bit. In fact, this will be more. This is 31 pips. Let's get rid of that. That's a 31 pip SL, to be fair. Measured that wrong, 31 pips. Right, so you're putting this box, okay, to your entry, and then down to here. Now this here, guys, okay, your target, that would have been your target there. You would have hit 103 pips. Now, this is where I'm going to show you a little bit more secret sauce, and then I'm going to show you how to do the risk to reward. On the cog, on this box, click the cog, okay? You can put in here what your current account size at this given time. So let's say you've got 500. It could be dollars, pounds, yen, whatever currency pair you do. Put your account size in there, okay? You say, right, I'm only ever going to risk 1% every time, okay? Ticks, this is the profit and sort of stop loss areas. Always miss out the last number. This will give you, the first numbers will give you what the pips are. So ticks are pips, okay? There's an extra number on the end. So in this occasion, it's 103 pips. On the stop loss, it's 31 pips because you're getting rid of that last number, okay? Right. Now, You'll see on here, if this trade goes my way, okay, on an account size of around about $500 or £500, 500 yen, you'll see you're going to make, on a correct trade, $16 and whatever cents, okay? If it goes out of your way, you've basically lost around about $5, okay? From there, we are going to go to the euro, US dollar. Okay, so we're just going to go to Forex calculators on my FX book. Position size calculator. Account size, again, we said 500. Risk 1%. So only ever risk 1%, guys. You are measuring this gap. Okay, so you're making sure that you're risking this 31 pips. Put your 31 pips in there. Okay. You got Euro USD in the drop down. Okay, Euro USD, Euro USD. Let's just take a look. Click calculate. This is telling you what your pips is that you're going to risk. Okay. On this, it's 0.01. So it's just above the halfway. You again get rid of that. You could go to 0.02 because you've gone over the halfway point. Okay. On this occasion, it's 0.01. However, if you had $1,000, let's say $1,000 in your account, get rid of that last number, you would just risk a lot size of 0.03. Okay. If you had, let's say, 5,000 in your account, let's calculate that. Get rid of that last number, you would be doing a lot size of 0.16 per trade. Okay, guys. Now these trades these lot sizes will change every time you take a trade. They will change every time you take a trade. Okay, so what I generally do when you're doing the proper risk to reward, I would only ever trade one pair at a time. This will help you to not overtrade yourself. It'll let you let the trade run its course and do what it needs to do to get you to your goal or to hit your stop loss. If you start multiple trading things and just putting in any lot size, that's where you're going to harm your account. Okay, so I hope that makes sense. Quickly go back to share screen. And again, this will just give you a little indication of what you could possibly win. Again, if we go on to, let's see, if this was 5,000, you were risking 1%, you could possibly make $160 odd. Okay, you would lose around about $50 on your account risking 1%. Okay, guys, so that's the quick training for this. I'll do a few more of these as the time goes on. If you have any questions, please just drop them in the comments below. Okay, guys, thank you very much.